Hey, what's going on, traders and investors? Todd Gordon, tradinganalysis.com, insideedgecapital.com. Happy Tuesday, happy summer. Just coming back. We did a family trip to Greece and Italy. Nice cruise. It was fun. On purpose over the 4th of July holiday. Market's quiet, probably. We did make a move up to new highs. And the bid is persisting, and we do have some pretty key data coming up at the end of this week. So things are going to get busy again after a quick little break. So tomorrow is day 2 of Chair Powell's testimony, semi-annual testimony in front of Congress, Senate banking. Then Thursday is CPI. That's going to be a big one because we just saw some weak jobs data Friday while I was overseas, and that wasn't great, and it upped the chances of a September rate cut, and then November is about 85 cut, 15% no cut, and then so CPI will be certainly important on that one, and then earnings kicks off Friday with the banks. So for this video, I'm going to go in a few different directions. I got to go quick. I'm going to finally get a haircut. I look like a crazy man. So a few different directions. It's kind of a wandering, meandering market ahead of these key data points that I picked up. But the bid is there. The bid is the market's strong. So before I jump into I'm working hard on the indexes. The trend is up. There is no doubt about it. But on the member side, for members of Trade Analysis and clients of Inside Edge, we're working very hard to respect the trend that is in play, but also be very cognizant, mindful, cautious of the potential pitfalls, potholes, barricades, speed traps, dead ends that may be coming. Let me just start big picture NASDAQ. From an Elliott Wave point of view, and I'm sort of hesitant to speak with some degree of confusion or uncertainty with the Elliott Wave theory publicly, because the art of speculating and putting yourself in a position today and hopefully make money tomorrow is it's not a certain process. So you got to weigh the risks and rewards, the probabilities of multiple scenarios that you may face down the road. And then when you face one of those possibilities, then, you're like, okay, I've accounted for this and I know what to do. So you quickly and calmly, adapt. So one of the conversations we're having is guys, this might be a significant bull market that is in like the 3rd or 4th inning. It's very possible. And that looks like this. If this NASDAQ weekly is accurate, and this is wave 1, this is wave 2, that means we're subdividing inside of this blue 3, which is up and off the screen. Okay. Now, there's a lot of fib, there's a lot of stuff going on here, but if that's accurate, the lower target for a wave 3 is at least the percent distance traveled in 1. And that's going to be up, that's a 52.6% rally from the end of wave 2, which is going to be right here. 52.6 is going to be right at that blue 100% fib projection level. So if the bull market is on, and I'll show you an alternate, if the bull market is on, NDX 100 level of 21,400 is likely. Okay, and using the Elliott Wave guideline, a wave 3 is usually the longest and strongest wave, and often the projection is a 1.618. So I mean, guys, like that means we're in the middle of the 3rd wave. I mean, that still is another 35% to go. I mean, that's going to be a year and a half from now, right? Or will it? So that's that. Now, the other possibility is maybe this isn't 1, 2, 1, 2, like I have here, and this is like once in a couple generation wave 3 move, and I'll show you the alternative, and just near term, we do have some short-term resistance in the 22K in the NASDAQ that would likely give us a wave 4. Then we move up, at some point. I mean, that's a long ways from now, and I need to make more time sideways, kind of push it out into 25. But that's the bullish outlook. Now, if it's not 1212 from the end of 2022, and it is in fact a 5-wave move, there's some interesting things happening here. We have 1, 2, and wave 3 was shorter than 1. It's not wrong, it's just uncommon. In fact, it was a 618 projection of 1 versus 3. And what's also very unlikely is, see how small in depth and duration this wave 4 is compared to 2? Like, I don't think so. But this is a potential roadblock ahead of us that I'm very much aware of. And, if it is a 5-wave move from November 22, then we're going to have a 3-wave decline to face. And I am already discussing with our wealth management clients hedges heading into the last 5 months of the year to potentially hedge and move back towards the breakout of December of 2021, and the NASDAQ is 16,765. So I don't know. I wish I could tell you I know what the future holds, because if I had a high degree of confidence that we're going into a third, like, I'm going to take as much equity out in my house as I can, sell everything, and get as much stock on margin as I possibly can and make life-changing money. Like, don't have to work again. I mean, that if the red count is, if that's the way it's going to go, like, this is huge. Okay, but I don't know. Nobody knows. But we have to be aware of multiple scenarios that may play out. And I have a few other interpretations, but just in the interest of brevity for this video, I'm going to keep it somewhat concise. Higher or lower from here, right? Thanks a lot, Todd. I appreciate that. Let's take a look at a few other important markets. Rates are on hold. So, when I was overseas, the 10-year yield bumped up to 4.5. We sold down to 4.3. We're fine. The 2-year yield actually dropped faster than the 10-year yield. Okay, and that's interesting because we're getting more certainty of a Fed rate cut, and CPI Thursday is going to be important. What does a 2-year yield dropping faster than a 10-year yield do? What it does is it uninverts, it de-inverts, it steepens. No, I don't know, whatever you want to call it. It takes the yield curve further out of inversion. Okay, so the inverse yield curve looks like this. Anything below the 0 is inversion. Well, if the 2-year yield drops faster than the 10-year yield, that will put the yield curve further out of inversion, move the yield curve up. If the 10-year yield moves higher at a faster rate than the 2-year yield, that also can take the yield curve out of inversion. But what we do know is the 10-2 yield curve has resistance about 20 basis points of inversion. And if we get a move up, I think we'll continue to see a rotation into growth, okay? And this is something, I just sent this out to our wealth management clients. This is a screenshot. Like, value growth ratio just broke a 3-year triple bottom. I mean, that's big time. Okay, and that's even with it divorcing from the correlation that's been in play with yields. So growth is outperforming value because value growth ratio is dropping despite rates moving higher. And U.S. yields are under control at 4.5, 4.2, and maybe go quiet for a while. But the fact that we saw on the RRGs, the growth ETF on the monthly start to hook back, and on the weekly, we had a big old nasty hook up in favor of growth out of value. Like, guys, this kind of development here, that is not usually the sign of the blue count in the NASDAQ, which says we have wave 5. We saw a similar rotation into growth here when so many people were bearish. And I was watching the rotation in the end of 22 and the beginning of 23 in tech, comms, consumer discretionary. It was 22, 23, so right about here, which was the top in the value growth ratio. This look right here, it was the same kind of hook into growth, but it was over here in weekly weakening back in late 22, early 23. Okay, so if we go over to the rotations, what's rotating in? Well, even consumer discretionary, which has been pretty weak on the weekly, even XLY is starting to move in a nice heading. Also moving in a nice heading is XLK, which is technology. And comms has been a little weak. It's already on the right side, but communications has been rotating out a touch. But the stocks are fine. Meta, Google, Netflix, they're fine. Even like T-Mobile's joining in there. Chipotle's had a little bit of problems. The large cap consumer discretionary names have been rotating out. And there's talk of a softening consumer because of that. I don't think so. I think it's a rotation in on the smaller cap or lesser market cap stocks like Starbucks. Go look at Dutch Bros. Walmart and Costco look fine. Chipotle is sort of struggling, but there's some other stocks, like Kava is doing extremely well. So, it's a broadening of the market. So consumer discretionary, I think on the whole is coming in. Tech looks good. Comms, I expect to see him rotate back in, right? So, some of the big ones that you're going to be accustomed to seeing, and you probably want me to talk about, Apple. Apple's breaking higher in wave 3. It's just there's no two ways about it. Let me build this guy over. Here we go. So we're moving higher in wave 3 in Apple. The breakout was real. Hardware refresh cycle's real. They're in AI. So it's a high valuation for Apple, but they're going to higher valuation fine because they're going to maybe reaccelerate some earnings growth, right? So 100% 3V1 projections at 261, and then if you get the full 1618 for wave 3, that's 24, 36 months out, 349 in Apple. Microsoft, there's a couple of different wave counts I'm looking at here. This is the one I've been holding on for a while, which is a wave 5, and the whole thing's going to reverse. This is ugly, 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 ugly. So, I'm looking at a possible 1-2, 1-2 here in Microsoft as well. So, I'm not sitting here pounding the table that we're gonna do in a third of a third, generational lifetime changing money, but it's a possibility. Weekly on NVIDIA. NVIDIA just got upgraded. I think KeyBank, Key Capital Markets upgraded to 180. And NVIDIA, you know what 180 is? 180 is the 100% projection of this move compared to this move at 182, right there in blue. So if we can get back above the 140 mark, I think 180 is ahead of us in NVIDIA. Unfortunately, we have to wait till August for earnings there. So anyways, I just wanted to touch base, say, hey, I'm back, and we're working hard, and should be interesting. So take care, keep in touch, and I'll talk to you guys soon.